Today we are going to discuss one another topic in cost and management accounting, which is the process costing. This is a very important topic and a very likely question is always from there. So first, welcome to all of you to the cost and management class. Just a minute. So let us start with the basic concepts in cost accounting. Process cost. So what do we understand by process costing? Number one, here the raw material is used to produce the final product. And it undergoes a series of process and then we get the final outcome. Each process or stage gives an output which is used as input for the subsequent process. A sequence of process cannot change. So it is not that we can take process 1 first and then process 2 and then process 4 and then 5 and then 3. So the order of the process remains same. So process 1, whatever is the output, it will move to process 2 and the output of process 2 will move to process 3 and so on. The total number of processes can vary. Some manufacturing processes can be 2 processes only, and then the finished product is ready. Whereas they can be processes where they are 4 process, 5 process. So there is no fixed number of processes. Each final product will have a unique number of processes. So 4 processes and then maybe the finished products is ready. So it can be 2 process, 3 process, 4 process, any number of processes, and then the finished goods are ready. So what happens is the output of process 1 goes to process 2. Is the input for process 2. Output of process 2 is the input of process 3. And so on. When we reach the last process, the final product is ready. It moves to either finished goods account. So in the last process, we create the output and we move it to a finished goods account. That is where we take it. Generally, we assume that entire output of finished goods or process on any process, entire output of process or various processes is transferred to the next process. So we assume that the entire output, whatever is there in first process, it will move to second process. The entire output of process 2 will move to the third process. So we don't keep, there should not be any closing stocks in any process unless specifically mentioned. So if the question is very specifically saying, yes, there is a closing stock, 1,000 units were produced in the process 1, but out of the 1,000 units, only 750 units move to the next process. Then we will transfer 750 units to the next process and keep 250 units as closing stock. But if nothing is said, then we don't assume there to be any closing stock. Yes, good morning, everyone. All those who are joining now, good morning. So is this clear? So there will be absolutely no closing stock in any process. Further, when I say no closing stock, I'm talking about the complete output, completed units. The completed units of output is transferred. There can be stocks or closing stocks of raw material used in process or work in progress, which is not complete. So what happens? Let's say this is process one, and 100 units of raw material is used in the process, and you start working on them, and it becomes work in progress, and then it becomes finished goods. So it is possible that during a period, all 100 units of finished goods is produced. Now, when I say finished goods, it is the output of process one, which is in itself complete. So not complete finished goods, but the output of process one, which is complete for process one only, not the completed output or which is to be sold in the market. Like when you churn crude oil, so you get final product as petroleum or yarn. However, what can happen is that it may undergo 2 or 3 processes. So the final product would be petroleum or yarn. However, in this subsequent processing, in between, whatever the outcome of process one is taken as a final output of process one. So output of process one is entirely transferred to the next process. However, once again, let's say if we take 100 units, but we start working only on 70 units, 30 units of raw material is lying still in stock with process one. Out of these 70 units, 5 units are still work in progress. So 65 units is the output of process one. So we assume that these 65 units will move to process two to be further processed there. So we don't assume that we keep a stock of 65 units at all in process one unless specifically asked. However, there's definitely uh, going to be a work in progress of 5 units, and there is definitely going to be 30 units of raw material stock. So you've asked the question, what is a yarn? So when you use the raw material and start processing it, sometimes the output may be bifurcated into two. So we'll discuss about byproducts here. Just imagine you are churning the cream, and then what happens? After some point, you end up getting butter and buttermilk. So similarly, when raw oil or raw material of crude raw is processed, oil is processed, you generally end up getting refined petroleum and some byproduct in the form of acetate yarn, from where you can make synthetic clothes, etc. So what I'm wanting to emphasize here is that if there is a process, that output of that process, if complete, will move to the next process. But if it is not complete, it is WIP, it will be the closing stock of that process one. So when process one will start the next period or next year, then in that case, there would be a closing stock of WIP. Similarly, if it starts with 100 units but does not use at all that 100 units, does not start working on those 100 units, it works only on 70 units. So there is a 30 units of raw material which is lying in the process one itself as closing stock. But if the question is saying that out of 65 units, 60 units move to process 2, then we are going to have a closing stock of finished goods also. Okay. Another important thing is generally all the elements of cost, material, labor, and wages, labor or wages, whatever you call, and overheads are applied in each process. These overheads are directly attributable to the process. So you know that these are the overheads and they belong only to this process. So if it is overheads of process 1, it will be charged to process 1. If it is an overhead of process 2, it will be charged to process 2. If it is an overhead of process 3, it will be charged to process 3. There can also be some indirect overheads, meaning they are common to more than two processes. These common overheads are allocated to the different processes in some proper ratio that may be given based on material cost of each process, based on wages of each process, or prime cost of each process, so on. But if nothing is mentioned, we will allocate on the basis of wages. Okay. For example, if material cost is 100 in process 1 and 200 in process 2, labor cost is 50 here and 20 here, and overheads specific to process 1 are 20 and 20. However, general overheads of 70 rupees or 35 rupees is also incurred. So either the question will mention how the 35 rupees of general overheads is to be allocated between process 1 and process 2. If nothing is mentioned, then we will allocate the 35 rupees in the ratio of labor or wages, which is 5:2. So 25 rupees will go to the process 1, share of general overheads, indirect overheads, you may also call them, and 10 will be allocated to process 2. So each process will have certain expenses which is specific to that process, but it may also have to bear a portion of the general or indirect overheads, which has to be allocated to both two or three processes or four processes in some specific ratio. If that ratio is given, you will utilize that ratio. But if that ratio is not mentioned, use wages as your best measure or basis to allocate the general or indirect overheads. Okay. Now, very interesting thing which is particularly related to process costing is terminologies like normal loss, abnormal loss, and sometimes abnormal gain. So we are not only be going to make the process accounts, we are also required to prepare the normal loss account, the abnormal loss account, or the abnormal gain account. The abnormal gain may also be sometimes called as abnormal effectiveness. So like I said, if 100 units are put in a process, the output will not be 100. The output of process 1 less than 100. For example, the output is 90 or the output is 85, so on. So the output is less than 100. A normal loss percentage is given in the question, say 5%. So it means that whenever 100 units are processed in process 1, there is a loss of 5%. So 5% of 100 is a loss of 5 units. So we expect a certain output. We expect the output to be 95. So here, if the output is 90, it is implied that we had expected from 100 95 units, but the output is 90. So it is implied that 5 units are further lost. And this is not something normal, this is abnormal. Similarly, if 100 units are processed in process 1 and 5 is the normal loss, 95 units should be there. But if we get 85 units, it implies that there is a loss of 95 minus 85. So we should have in hand 95 units, but we have only 85 units. So 10 units is the abnormal loss. But if we had 92 units, sorry, 97 units, what does it mean? It doesn't mean that the normal loss has changed to 3 units. Normal loss is still going to be 5 units. So we were expecting to have 95 units, but we have 97 units. So it implies 95 minus 97 or 97 minus 95. We have 2 units extra. So this 2 units is abnormal gain. These 2 units are abnormal gain. When we say abnormal gain, it doesn't mean that some units have come up from anywhere. It means maybe we had expected the workers to process 100 units, and in a normal call, uh, cause they would have lost 5 units. So we would have generally got 95 units. But here, maybe the workers were very efficient and careful, because of which we got not 95 but 97 units. So because of the way they have processed, or maybe because of the equipment, or maybe because of the environment in the factory or production department or the process, they were able to produce 2 units more than what was expected from them. So this 2 units becomes abnormal gain or abnormal effectiveness. How does this normal loss of 5% is given? It is generally output of experience and research. So through research or experience, you can say that whenever you are putting 100 units in the process, you end up getting 95 units only. So that is the through experience and through industry research, we know that this process has a tendency of 5% normal loss. This normal loss may be collected or it could not be collected or sold. So if it is uncollectible, you cannot collect it, then it is totally waste. Nothing will be recovered from it. For example, if you will keep kerosene oil or petrol, after some time you will see that the quantity or amount of that petrol, kerosene oil, spirit, this has evaporated to some extent. So it's the natural tendency of the product to evaporate. You cannot do anything about it, and you cannot even collect those from the atmosphere. So waste which is non-collectible will not give you anything. You will not get anything. Nothing will be recovered. So if nothing is recovered, it will not even be sold in the market, and it will be totally waste. Scrap means you may be able to recover something, and then if you recover something, it may have a sale value or may not have any sale value. So for example, if the raw material was for 2000 rupees per unit and 5% is lost, but this 5% is scrap, you have been able to recover it, and this can also be sold at the rate of 40 rupee per unit. So that means your normal loss will have some value. Okay. It is not absolute zero, it will have some value. So normal loss or any waste that you get from the process, it can be sold or may not be sold. So if it is sold, that means you are able to recover some amount from the sale of that normal scrap. But if it is waste, which is not even collectible, or scrap which cannot be sold for anything, zero value, then we say that the scrap or the normal loss will not have any value at all. Okay. So this is very, very important when we are doing the questions on normal loss. When you say scrap has some value, another important thing is you have to see that it is not only let's say the output is 90 units, then it's not just the 5 units of normal loss which will be sold for 40. The 5 units of abnormal loss will also be sold at 40. Or here the 10 units of abnormal loss will also be sold at 40. But here you don't have 5 units to sell. Out of 100, 97 units were completed and they moved to the next process, which means the scrap which you have in your hand to sell is only 3 units. So you don't have 5 units to sell. You will be actually physically able to sell only 3 units of waste at 40 rupees. So only 3 units of scrap can be sold. But that doesn't mean that we will start taking the normal loss as 3. The normal loss will still be taken as 5 units, though out of which only 3 units could be sold at 40. So what I'm trying to say is normal loss is always based on a percentage or figure which is established by the industry standards or and over a period of experience. So that does not mean that if you have more units or less units, you start taking the entire difference as normal loss. The normal loss will remain 5%. It will remain 5. If you make less than 95 units, you have abnormal loss. If you are able to make more than 95 units, anything between 95 to 100, that will become your abnormal gain. But no matter whether you have abnormal loss or abnormal gain, the normal loss is always taken as 5% here in this example as 5. Though if you will have abnormal gain, you will not have the scrap enough in your hand to sell them in the market, right? One last thing that I'll speak here about before we take up the concept is material which is introduced in a process. Then it can be that some processes may require material 1 and material 2. Two different types of material are may be required. So let's talk about process 1, process 2, a process which is an intermediate process. So let's take a process. You have some parts. You assemble them into a chair, let's say. So you have some kits here. And these kits, then you assemble them into a chair. So process 1 is assembling the kits into chair. These chairs then move to process 2. And here they are, let's say, painted. So I've taken a process where in process 1, you assemble the kits to manufacture the chairs. In process 2, these chairs are painted. So in process 2, what will happen is some material will come from process 1, which is the assembled chairs. So let's say if 1000 units of assembled chairs are there, they will move to process 1, 1000 units. And in process 2, again, material will be used, and this material is paint. So now you start painting the chairs. So there will be some material cost. So let's say 1000 painted chairs are for 100,000 rupees. And in second process, you use material again, 20,000. So remember, this is the subsequent material which is used in the process. It will not have units. So 1000 units is the only units on which this 20,000 rupee material paint is applied. So do not get any confusion with if there is a subsequent material which is also used in the process. It can be in any process, 1 or 2. What's the background reason for taking normal to certain extent and abnormal loss after that portion in order to reduce the cost of the product, right? In order to What's the background reason for taking normal to certain extent and abnormal loss? Anil, your question is not very clear to me. What is the purpose of taking normal loss to a certain extent and after that you take a no abnormal loss in order to reduce the cost of the product, right, ma'am? In order to, if I assume it to be, what is the purpose? I'm coming on to that. What is the purpose of normal loss? The most important thing in cost accounting is that the cost of normal loss is to be borne by good units. So if 100 units are introduced, 7% is normal loss. Okay. These 100 units were costing, let's say, at the rate of 5 rupee per unit. So your raw material cost was 100 into 5, 500. But if there is a 7% normal loss, so 7% of 100, I assume that 7 units will be lost in process, which means my raw material cost per unit will be a slightly inflated 500 is the raw material cost, which has to be now borne by 100 minus 7, which is 93 units. So I will have a slightly inflated cost. My cost per unit will not be now 5, it will be 5.376, rounding off till 4 decimals, but generally if it is currency, you can round it off till 2 decimals. Yes, I'm trying to do that only, Anil. So the cost of normal loss is to be borne by the good units. So 500 divided by 93, your raw material cost is slightly then inflated because good units will bear that cost. So it will cost you 5.38 per unit. And like I said, you have to be very careful. You have to see that is normal loss sellable? If normal loss of 7 units could be sold, you can retrieve them, you can collect them. And if it could be sold, let's say at the rate of 2 rupee per unit, then we say that when the normal loss is has recovered 7 into 2, 14 rupees by itself, why should we charge the entire 500 rupees to 93 units? In that case, the cost per unit will be 500. Out of 500, 14 rupees is recovered. So it is going to cost us 486, and this cost of 486 must be borne by the 93 units. So when the cost of 486, 500 minus amount recovered from sale of normal loss, 14. So 486 is the cost, which when divided by 93 will give you 5.225, rounded off 5.23. So this is the most important thing which you will be applying in all questions of process costing, that normal loss has to be calculated. Once the normal loss is calculated, you have an idea that how much should be the output of a particular process. And then if your finished units in that process is anything less than 93, the difference is attributed to abnormal loss. So if my output was 80, I would have assumed 13 units is the abnormal loss. If my output was 94, I would have assumed 1 unit to be the abnormal gain. If you will remember, when I started the session on process, there itself I made one assumption or told you that we assume that the entire output of any process is subsequently transferred to the next process. So here, when I had 100 units, I should be having an output of 93 units. Then if I have transferred 80 units to next process, I have assumed 13 units to be abnormal loss. Basis on the premise that entire output moves to the next process. I did not assume the 13 units to be the closing stock of output, which is left lying within the process one. So process one does not have a warehouse where it keeps the finished units. It simply moves the entire output to the next process. Therefore, where have these 13 units gone? They must have been lost in the process, which is not something normal, so they become abnormal. If there is additional information that 5 units of output is kept in process 1, did not move to the next process, or we sold the 5 units from process 1 itself in the outside market, then my abnormal loss would not be 13, then it would be 8, because out of 100, 7 should have been lost in the process. I agree. It should be 93. Out of 93, 5 I have sold in the market or kept in my warehouse. So 93 minus 5, 88 is what is should move to the next process. Then if 80 is moving, which means 8 units become the abnormal loss, right? So you have to take into consideration that what is the expected output, and if your units are more than that, there is an abnormal gain. If it is less than that, it is abnormal loss. And we assume that entire output is transferred to next process. We have not kept the finished units of that process somewhere in the warehouse, neither we have sold it directly to any outside organization or in the market. I will draw a parallel here with the story so that you understand properly. Let's say you are 5 friends. Very close friends, and you want to go for a trip. So you tell all your friends that go to a trip, and you find out what is the cost of the trip. So you are told that it is 20,000 rupees. So the trip is going to cost you 20,000 rupees, and you are 5 friends. So what should be the share of each of you? Each friend should contribute 4,000 rupees. So that's the normal thing. 20,000 divided by 5. Okay. Now what happened is one of your friends did not agree to go to the trip. He is refusing, and you are not ready to go without him. So when you kept on asking why is he not going to the trip along with you, he told you that he cannot bear the cost. So if that is already known to you, it becomes normal that one friend is not able to bear the cost. So what do? You share the entire cost of 20,000 amongst the 4 friends who have the capacity to bear the cost. So your cost per trip would not be then 4,000, it will come out to be 5,000 rupees, which means those who had the capacity, they bear the cost of the 5th friend who could not pay for the trip. So it becomes inflated. So when your friend realizes that his cost is being borne by all of you, he tells you no, that he will at least pay, let's say, he's not saying he'll not pay anything. He says, at least I can pay 2,000. So then all 4 of you do not need to bear the entire cost of 20,000. So 20,000 minus 2,000. It is only 18,000, which all 4 of you will share amongst yourself. So then it comes out to be 18,000 divided by 4. So you will bear 4,500. So similarly, when you have 100 units, the cost per unit will come out to be total cost divided by 100 units. But when you realize that there are 7 units which will not be of any use, so you divide the cost by 93 units so that good units absorb the cost of the normal loss. But then if normal loss can also be sold for some amount, then you don't bear the entire cost. You subtract whatever is recovered from the normal loss, and the good units bear only that cost. And now, so 4,500 rupees is the normal cost. Now, if one friend tells you a lie that he has already paid or he does not pay despite several reminders. So one friend does not pay, this becomes abnormal. So you will lose this 4,500 rupees, which you should have recovered from a friend. So this becomes a abnormal loss. Okay. So that is the fundamental rule here. And basis this, remember this one formula I'm writing here. Total cost minus scrap realized from sale of normal loss divide by total units minus normal loss units. This will be the fundamental formula in all the questions of the process. So whether there is a normal loss or not, whether there is a scrap realized from normal loss or not, this will still hold true. Input compared with output yields normal loss, and output compared with the final product yields abnormal loss. Uh, no, I don't think. I'll just explain again. Let's use the words input and output only. Input 100 or 1,000. Let me take a different example. Input 1,000 and it's process 1. Okay, what do you mean to say? Input compared with output yield. So what input compared with expected output yield, if I add to your word, then it makes sense. Input compared with expected output yield. Okay, that gives normal loss. And the final output compared with the expected output yield will give you the abnormal loss if it is less. So expected output is to be calculated where it will be clearly given in the question. Let's say normal loss is 3%. So 30 units should be lost and my expected output is 970. This when compared with the final output of process 1. So don't confuse with finished goods. Finished goods will come to the very end of the last process. So output of process 1 is then compared with the expected output of process 1. Output of process 1 comes out to be 925, which means it is less than what should be by 45 units less. So here 45 becomes abnormal loss. But if the actual output of process 1 comes out to be 975, it is slightly more than what was expected. 975 is more than 970. The difference is 5. This 5 becomes abnormal gain or effective. Right. So coming back to this formula, this is the most important formula and this will hold true in all circumstances. Total cost minus scrap realized from sale of normal loss divide by total units minus normal loss units. So let's look at this formula from the perspective of this example of fins. Total cost 20,000. Scrap realized from normal loss 0. Total units 5. Normal loss 0. So the cost comes out to be 4,000, right? 20,000 divided by 5, 4,000. Now, if I say that there is a normal loss of one friend, so 20,000, but he is not giving anything, 20,000 minus 0, divide by 5 minus 1. So 20,000 divided by 4, your cost will come out to be 5,000 per friend, per person. Third example, normal loss, total cost 20,000. Scrap realized from sale of normal loss. Here we can say what is one friend which is not contributing completely is able to contribute 2,000. So 2,000 is recovered, which means 18,000 is the cost. Normal units 5, one is abnormal, one is total 5, one is not normal, he's not able to contribute. So 20,000 minus 2,000 divided by 5 minus 1, 4, 45. So this formula will apply whether or not there is a normal loss, whether or not there is a scrap realized from sale of normal loss or not. As we are adding scrap realized gain, but why are we not adding the units parallel to it? Like I said, if you are 5 friends, each of you are going for a trip. So each of you going to contribute 4,000 in a normal circumstances if everyone is able to contribute 20,000 divided by 5. But then if one friend says, I'll not contribute anything, but you still want to take him along, then what will happen? The 20,000 will be borne by 4 friends, 5,000. But then if he says, I will still contribute something, it's not that I'm not going to give you anything. And he says, I'll not give 4,000, but I can keep 50%. So he says, I'm ready to give 2,000. So whatever is realized from sale of normal loss should be subtracted from the total cost. So 20 out of 20,000 cost, which was supposed to be borne by 5 friends. So cost would have been 4,000, but now one says I'm not going to contribute. So you thought the cost would be 5,000, but then he came up again. He said, no, at least I can contribute 22,000 out of my share. Then your cost would be 18,000 divided by 4, 4,500. Is it clear now? So we are subtracting whatever is realized from the sale of normal loss, and we are also subtracting the normal loss units. So we are not adding one and subtracting less. We are doing same treatment. But if nothing is recovered from the sale of normal loss, then obviously the entire good units will have to bear the total cost. But if something can be recovered, their burden will get slightly reduced. Okay. And whatever moves to the next process, 4,500 is fixed. So now we say that the 4 friends should contribute 4,500. Now, if one friend is not able to contribute at all or does not contribute again, this you had not expected. So you will treat entire 4,500 as the loss. 4,500 becomes the abnormal loss. You will not do again that 20,000 minus 2,000 minus 2,000 divided by 3. No, we will not change our standards again. We have established it that, okay, one friend is not able to contribute anything, then it is for 5,000. But if he says that I can contribute 2,000, then it is 4,500 per friend. Now, if one does not pay anything at all, then it is going to be 4,500 as the loss, will not recalculate dividing by 3. What skill-wise weightage for every subject given on ICAI? I didn't get your question, Navneet, and it is a little tangent question. So we'll discuss about it later. First, let's focus on the chapter itself. And if you have anything related to process costing, which I'm explaining, please, that is what you can post your question as. Okay, please. All right. Is this clear? So these are the concepts in your process costing. And now let's see how we prepare the various accounts in the process costing. So process costing, raw material will be, I'll quickly recap. Raw material will be used to produce the final product. It has to undergo subsequent processes until the finished product is reached. However, the finished output of any process becomes the input for the next process. So the finished output of process 1 becomes raw material for process 2. The finished output of process 2 becomes the raw material for process 3. And from the last process, it moves to the finished goods account or is sold from there itself. So completed output is transferred to the next process. If there is, and we assume that there is no closing stock of finished output in a particular process, entire amounts which are units which are produced are transferred to the next process. The reason being this is that because of this, we assume that there will be a abnormal loss if the units transferred to next process are given as less. However, they can be mentioned in the question that there is 2 units, 10 units, a certain number of units of finished goods which has been kept at the process itself. So if the question is silent, we'll assume entire output being transferred to the next process. However, they can be stocks of raw material or WIP. Generally, in all the processes, three types of costs are incurred: material, labor, and overheads, which are directly attributable to the process. Here, when we talk about overheads, we are only interested in the manufacturing or production overheads, uh, administrative, selling, distribution. These will come later when the goods are finished, completely produced. So first they have to go through processes, process 1 to process 2, process 3, so on. So until then, there is no question of administrative or selling and distribution overheads. Maybe if these overheads are still given and to be dealt with in the question, you will apply them in the last process. So generally how it is given, like let's say process 1 and 2, 100, 200 is the raw material cost, labor cost is given, overheads which is directly attributable is given, and indirect overheads or general overheads are given. Then you have to share them or allocate them to the two processes in some ratio, which might be given. Otherwise, you can take wages as the best ratio. So the labor here is 50 is to 20, that is 5 is to 2. So you allocate the general overheads in the ratio of 5 is to 2 to process 1 and process 2. Very important thing in process costing would be the normal loss, and abnormal gain. So what it is that when you have certain number of units input in any process, through experience and industry standards, it has been established that this process has a tendency to lose a certain number of units. So that has been established, let's say, as a percentage. So when you put 100 units and 5% is the normal loss, we expect to receive only 95 units from the process. Now, if actual output is more than 95, we say there is an abnormal gain or effectiveness. But if actual output is less than even 95, the difference between expected and the actual output of that process becomes the abnormal loss. Now, this loss can be like waste or scrap. If it is not collectible and nothing is recovered, it becomes waste. If it is collectible, then it is possible that it may give you some value or it may not. So if it doesn't give any value, again, it goes waste. But if it gives you some value, it can be sold as scrap. So the whole idea is that good unit should be able to bear the entire cost. But if normal loss is able to generate something, we will not charge the good units with that cost. Okay. Then another important thing is that process can have more than one material. So if more materials are introduced, keep the units only to the first fundamental or the basic raw material and take material 2 or subsequent material as sundry material. It will not have units. So until and unless in process 2 you, so just see process one is able to manufacture 1,000 units or 1,000 chairs, and these 1,000 chairs move to process two. So process two job is to paint these 1,000 chairs. Now, when you buy paint, paint is also a material. So you will be given that the material cost is in process two is another 3,000, 5,000, 20,000 rupees. One exception can happen. All of a sudden, there is a demand for 18,000 chairs. But process one is not in a position to quickly assemble these 8,000 chairs. So it may be possible that process two purchases another 8,000 units from the market. So maybe they will not cost another 100, they will cost more than that. So maybe they are costing uh, another 100,000. In that case, your input in process two becomes 18,000 units. Now you are working on 18,000 units. Okay. So if process two has purchased from the market what it used to get from process one as finished product of process one, in that case only the number of units in process two will increase. Otherwise, if material cost is input in process two, it is assumed to be subsequent material. Okay, so if the question is very clearly saying that units have been purchased from the market, then we will not say that we cannot purchase units. Then that means the units might have been purchased. That is perfectly okay. So this is how the normal loss is, let's say 7%. So you should be expected to have 93 units. If it is 80, 13 is abnormal loss. If it is 94, 1 unit is abnormal gain. So the whole idea is that the total cost must be borne by the normal loss units only. But if normal loss can fetch something as scrap, so these 7 units, if they can be sold at 2 rupees, we will not charge the entire 500 to the good units. We will charge 500 minus 14. That divide by 93. So if there is normal loss, your cost will become a little inflated. But if normal loss can fetch something, it will not become very highly inflated. It will get reduced to some extent, depending upon for what price the normal loss will be selling. So this is an example which I have given. So I hope all the concepts are clear. From there, when you move to the last process, then you have the finished goods account. So let's see how the process accounts are generally prepared. So I'll stick to process one account only first. Okay, sorry, if it was 8,000, then it is 9,000. If it is 800, then 1,800. I'll just check and correct that. Thank you, Pooja. Purchase concept. Okay. So here I am saying what I'm saying in process two. So what will happen in process two? It will be a transfer from process one. So from process one, you receive material 1,000 units costing 100,000. Then it is specifically said that all of a sudden the demand for the output of the finished product increased And let's say the market demanded 1800 units or 1800 chairs. So if the market demands further 1800 chairs, 1000 units is already coming from process one on which you will be painting them, but still you are short of 800 chairs. So what you do is, instead of waiting for process one to further hand over 800 units of assembled chairs to you, you purchase from the market assembled chair. So what is the output of process one? If it is also available in the market in this form, so the output of process two is also available in the market, which means the finished unit of process one is transferred to process two, but it is also available in the market in this condition. So process one can also sell its product in the market, and it can, if process two requires more units or if there is a demand for product, it can also get it from process one also, and it can also purchase from the market. So if the demand for the product has gone down, let's say 1000 chairs were manufactured by process one, demand for the product goes down to 600. So what can process one do? Transfer 600 units to process two and sell 400 units in the market. However, if the demand goes up, then process 2 can get 1000 chairs from process 1 and it can purchase from the market additional 800 chairs. Okay, so in that case, this is how the total system works. But then whatever is the output of process 1, it should have a ready market so that it can sell when needed and it can be purchased from there when needed. Okay. When demand is short, output of process one may also be sold. When demand is high, process two may also purchase the units from the market. So then it will not start employing labor and overheads on 1000 units. It will start working on 1800 units. Sorry for that 8,000 and 1,000, 9,000. Otherwise, I wrote it as 18,000. Okay. So I assumed it to be 10,000 actually. Right? Mithila, is it clear? And so unless stated new units were purchased, increased units will always be treated as abnormal gain. Yes. So what is expected output? Anything less than that is abnormal gain. Anything more than that is abnormal. Anything less than that is abnormal loss. Anything more than that is abnormal gain. Because we assume no units are purchased in that condition until specifically said, and no units are sold and no units are kept in the stocks as finished units. Now let's see how we prepare the process accounts. So let's say process account, process one. You can have it in 4 columns or you can have it in 3 columns. So what will happen is, let's say in process one, I am first applying material. For example, 1000 units available at the rate of 5 rupee per unit. Amount becomes 5,000. To wages. Now wages are not units, so nothing will come here. So let's say on this 1000 units, you employ wages at the rate of 2 rupee per unit, or let's say 2000. So 2000 will be divided by 1000. It will come out to be 2 rupee per unit. Then you incur some overheads. Another 3000. So 3000 is incurred on these 1000 kgs. So 3 rupee per kg. So this is your simple process account. Now, if there is no indirect overheads which are to be allocated, it will become simple. Total cost is 5,000 plus 2,000 plus 3,000, 10,000. And total cost per unit will be, total number of units are 1,000. and cost per unit will be 10. Nothing is specifically mentioned about any normal loss, abnormal loss, or anything. So what happens? By transfer to process 2. So whatever is there, you will transfer to process 2. So how many units are transferred? 1000 units at the rate of 10,000 rupees. And this completes your process account. It is very, very important that units should match with the units and amount should match with the amount. Rate may not always match. Why? Because if there were normal loss, the rate would get inflated. But units and amount should always match. So even if you don't write the rupee 10 here, it is perfectly okay. You can also prepare the process one in 3 columns instead of 4 columns. So the same question could have been done here like this. To material at the rate of 5 rupee per unit. 1000 units, 5000. And simply to wages, 2000. And to overheads, 3000. By transfer to process 2, 1000 units, 10,000. Now you divide. So this is at the rate of 10 rupee per unit. Now check what is the total of the unit on the debit side, 1000. Total of the amount on the debit side, 10,000. Same is on the credit side also. Okay. Units will also reduce when there is a normal loss. I'll take it up from here. So this is a simple question on process account without any hassle. Now supposing I will use this format until and unless the rate format is specifically being asked, you will stick to this. Now let's make some changes on the credit side. So everything remains same on the debit side. So material input was 1000 units at the rate of 5. Wages are given as 2000. Overheads are given as 3000. So you can take a screenshot. What was done earlier was case 1. I'm doing case 2 now. There is a normal loss of 5%. Only this information is given. There is a normal loss of 5%. So the first case, like I said, the fundamental formula is total cost minus scrap realized from sale of normal loss. Scrap only from the sale of normal loss. Okay. Divide by total units minus normal loss units. Total cost minus scrap sold realized from sale of normal loss and total units minus normal loss. So total cost is 10,000. Scrap realized 0. In the first case, total units was 1,000 and normal loss units was also 0. So the cost came out to be 10 rupee per unit, 10,000 divided by 1,000. But now we have normal loss units. How much is the normal loss units? 5%. 5% of the input. If nothing is mentioned, 5% of the input. So 5% of 1,000 will become 50 units. So you'll write here by normal loss 50 units, but as nothing is there in money terms, so this is left blank because it is not going to give us any amount. So now my transfer to next process will be then you can write next process or process 2. 950 units. What we've been given, 1,000 units were there, 50 is the normal loss. So 950 units must have moved to the next process. And these 950 units will bear the entire cost of 10,000. Now you will divide 10,000 with 950 to find out the rate. And the rate comes out at an inflated rate of 10.53 rupee per unit. Now, remember that if you write here 10.53 and you multiply 950 by 10.53, it will not come out to be exactly 10,000. Okay. So this is only an approximate figure. So ensure that when you divide and then you multiply, it might come out to be different figures. So ensure that your totals of units and amounts always match. Okay. Is this clear? So question gave one extra information, and that is normal loss of 5%. And just because of that information, our cost per unit increased from 10 to 10.53 because good units of 950 units will bear the entire cost of 10,000. Right? Thank you so much. I am for pointing out that. Yeah. So the total of units should always match with the units and the total of amount should always match with the amount. 1,000 matching, 10,000 is matching with 10,000. Right? So one extra information in case 2 that there is a normal loss of 5% and our answer changed. It was transferred to process 2 at 10 rupee per unit earlier. Now it is transferred to process 2 at 10.53 rupee per unit. I'm changing this to case 3. You can take a shot of this. Case 3. Normal loss is 5% and scrap can be realized for 1 rupee per unit. Before I continue, remember that in the previous question, we had only prepared process account. We have not prepared normal loss account. Accounting fundamental principle, you can record only that which can be measured in terms of money. Why I have not written some amount? Because nothing is realized from sale of normal loss. So it is just that I have taken 1,000 units. I have incurred a total cost of 10,000 in that unit process, and my output is 950 units. As simple as that. So what happened to the 50 units? They were evaporated. So nothing can be written in amount because there is no money exchange. This is not an accounting transaction at all. But I have to give the details of the units. Therefore, no journal entry for this. Since there is no journal entry, no amount involved, no money measurement concept is there, zero, nothing. And therefore, I will not even prepare the normal loss account. However, the moment it says that the normal loss starts realizing 1 rupee per unit or certain amount, then my figures will change. So, case 3, one additional information is given to me, and that additional information is that scrap can be realized at the rate of 1 rupee per unit. Now there is something which is there in the bank. Bank account debit, how much? 50 units are sold for 1 rupee each. So how much amount did I realize? 50 rupees. Okay. Bank account debit by sale of normal loss units. So what is the cost which is to be borne? Again, this fundamental principle here, total cost or formula. Total cost is 10,000. From that 10,000, you have recovered a very nominal amount of 50. So your cost has now been reduced to 9,950. And this cost is to be borne by, was supposed to be borne by 1,000 units, but minus 50 units of normal loss. So now 950 units will bear a cost of 9,950, not 10,000. So 10,000 is the total cost, minus 50 is recovered, 9,950, and divided by 950, it gives me at the rate of 10.47. Okay, case 3. This was case 2. When normal loss was not giving any return, then it was 10.53. But now when normal loss has been able to recover 50, my cost has been slightly reduced by approximately 6 paisa per unit. So far, if you have any doubt, please ask me. Right. And then we will also prepare the normal loss account. What was the general entry like I said you? Bank account debit to normal loss. And that normal loss should move to process account. So your first entry will be what has happened. From process 1, we have got a normal loss. How many units? 50. What is the amount? 50. And what did you do to this? You sold this in the market. So you realized something from bank. 50 units were sold and 50 rupees was realized. So if you have process 2, process 3, process 4, you can prepare the normal loss account 1 only for all the processes together, and to process 1, to process 2, process 3, so on. Or you can also prepare separate normal loss account. So normal loss account of process 1. Okay. So you can see the totals will still match. Units will match with units. Amount will always match with amount. Got it? Do you want a short break? 10 minutes now. We can have a short break and we can continue with these cases after you come back, right? try to absorb all these what I have tried to explain to you so far. Okay. So we can announce a 10 minutes break here. We resume the session after 10 minutes. Thank you all of you so far. So we are taking right. So we're taking different cases. Case one was when there was absolutely no normal loss. Case two, there was normal loss of 5%, but there was no amount realized from the sale of scrap. Case three, when the scrap is also realizing some amount. Okay. So next, if we say that transfer to next process, another extra information is given, which is transfer to next process. So if transfer to next process is given, I'll take another slide on this. Raw material introduced is case 4 here. 1,000 units costing 5,000. Labor cost is 2,000 and overheads are 3,000. Normal loss. In the first case, nothing was given. So 1,000 units moved to the next process for 10,000 rupees. In case 2, normal loss was given as 5%. So 950 units moved to next process for 10,000 rupees. In case 3, scrap realizes 1 rupee per unit was given. So 950 moved to the next process at a cost of not 10,000 but 9,950. And in case 4, what additional is given is units transferred to the next process. Units transferred to the next process. This information is also given to us. And the units transferred to next process is not 950 but 900. So when we take the total of the units or when we try to balance the units, input was 1,000. Then what happened to that? Out of that 1,000, what happened to the output? There was normal loss, 50 units. And transfer to next process, 900. So we have some balancing figure or some hidden information here. Is the question saying that we have kept 50 units with us as closing stock? No. So where have these 50 units gone? So we assume that these 50 units have become abnormal loss. $950 units should be there, but out of which if 900 is only what we have, then 50 units are abnormal loss. Once again, material introduced in the process, 5,000 units, 5,000 rupees. Wages, 2,000. So you can calculate the rate at 2. Overheads, 3,000. You can calculate the rate at 3. By normal loss, 50 units at the rate of 1 would realize 50 rupees. By transfer to next process, now it is not 950 the balancing figure, it is 900 the given figure. So what has happened? There is a abnormal loss. How much units? 50 units the balancing figure. You will see that the units will total with the units here, and the amount will total with the amount. So don't do anything. Whatever we have done so far is only found out what is the abnormal loss by looking at the balancing figure of units. And we have pasted the entire information that was given in the question. I have not calculated anything else as far as amounts is concerned, right? So 1000 units is given 5 rupee, 5000, 2000, 3000, and 50 unit is the normal loss, 5% of 1000, which is sold at 1 rupee per unit. So 50 rupees is what you have got. And then you are transferring to the next process given 900 units. So when the first calculation that we have done is the balancing figure of abnormal loss in units, right? Now we apply our fundamental rule, and that fundamental rule is total cost. So take the total of the debit side. 10,000. Right? What was the fundamental formula? Total cost minus scrap realized from sale of normal loss. Only normal loss sale. Okay. So from sale of normal loss. So how many units were the normal loss? 50. How much amount is realized from that? 50 into 150. Divide by total units. 1000 minus normal loss units. So it's 1000 minus 50. So whatever the rate came out in the previous example, 9950 divide by 950, this will remain same. 9950 divide by 950, which was 10.47, it will still be 10.47. This will not change henceforth. So 900 into 10.47. So now when you multiply by 900 units, this rate 900 into 10.47. And this rate when multiplied by abnormal loss units. Okay. This is again multiplied by abnormal loss units. So this comes out to be 9423. Now remember, the next digit here was 9473. So I have rounded off till 2 decimals. But if you will multiply 900 also by 10.47 and 50 also by 10.47, your total for the amount will not match. It will be slightly different. So it is 523.5. Therefore, even if I take it as 524, it will not match. You can see 50 plus 9423 plus 524. It will not be 10,000. It will be slightly different. So 50 plus 9423 plus 524. So it is 9997. Whereas I need a total of 10,000. But then you have not done anything wrong. The difference has come only because of rounding off. right? So what you can do is when you divide 9950 divide by 950 in your calculators, you get a figure 10.47. You keep it 10.47 till last and then multiply it by 900. So you get 9426.31. So this I rounded off to 9426. And this is at 10.47 approximately. Okay. And similarly, when again divide by 900 and multiply by 50, so this comes out to be 523.68, which has been rounded off to 524. Now the two are absolutely correct because both will not give you zero point 0.8, zero point 0.5. So when you round off to the lesser number, when you round off to the higher rupee, it will always match. But if both are zero point 0.5 and you take to the next higher number, again you will have a difference of zero point 0.5. So one you take to a higher number and the other you can take to the lower number. Okay. Okay. You can take 10.473. Okay. And then you will get by rounding off, you get 9426. So ensure that you have to not show it as 9997. You have to show the total as always equal. Okay. Ensure that you round off in such a way that this does not create any problem for you. So 10,000 and 10,000 is matching and 1,000 and 1,000. So you may have to adjust these figures slightly in the process of rounding off. Sometimes in your examination pressure, you start assuming that maybe we have done something wrong and you start getting panicky. So ensure you have done everything right. It's just about filling the rounding of figures rightly. Fine. Now we prepare this time normal loss account and abnormal loss account also. So let's see how are we going to prepare the abnormal loss account. The normal loss account will remain as it is. Same format. To process one, 50 units were there, amount 50, and we sold these 50 units. By bank, 50 units sold for 50, and your normal loss account is complete. But what happens to the abnormal loss account? Now, here also we will write to process one, 50 units, but not at 50, this time it is 524. So we have talked about earlier that any abnormal loss, what do we do with that? What is the treatment for abnormal loss? Transfer to costing profit and loss account. If we are keeping non-integrated system, transfer to costing P&L account. Right. So if I write here by costing P&L account, 524, have I done everything correct or something is wrong? So this is wrong. Why? Why is it wrong? Because when your scrap dealer comes to your house and he picks up the scrap, does he say that this is your abnormal scrap, I will not take it? Assuming that your newspaper vendor sells you 30 newspapers in a month, let's say month of April, and it's your tendency that you always on the 30th of the month you call the scrap dealer and he comes to you and he takes away those 30 newspapers from you and pays for the scrap value. Now, if one particular month you sell 35 newspapers as a scrap, Does he say that you have picked up from your neighbor's newspapers, I'm not going to pay you for this five, right? Nothing like it. So a scrap dealer has nothing to do with whether a loss is normal loss or a abnormal loss, which means if 1,000 units were put in the process and 900 the next process, you had a scrap of 100 units, which you sold at the rate of 1 rupee per unit. Now, out of that, 50 was normal, so that went to the normal loss account. Another 50 units of abnormal loss will also be sold at 50. So, truly speaking, your loss is not 524. Out of 524, 50 is recovered, and the balance is your true loss. So, by costing P&L account, only the 524 minus 50. This should move. So another very important thing is when you have a normal abnormal loss, it can be sold that you understand. But just like normal loss, abnormal loss units will also give you a scrap value. Something will be realized from there also. So your true loss will not be 524, which is moving to costing P&L account. Your true loss will only be 474. Scrap value is to be deducted from abnormal loss. Yes, right? We had expected that we will have additional 50 units, which could be transferred to the next process as 524. So in the next process, we should have a value worth of 524. But what happened? This was not there. So this was our loss. But if this was not there, at least 50 is recovered from the scrap. So your true loss is only 474 rupees, which should move to costing P&L account, right? So this is how we do the calculation if there is a abnormal loss. This is your case 4, when the units transferred are also given and they are less than the expected output of 950 units, right? You can take a quick screenshot and I'll delete this from here then. Now, let us say units transferred to next process are again given. But they are given as 918. Sorry, not 918. 968. Units transferred to next process are 968. So what was the units in input? Case 5. Why? Because the units transferred are more than the expected unit and therefore there is an abnormal gain or abnormal effectiveness. Abnormal scrap is not given in the question. Abnormal scrap is the missing information from the statement of units. Rate of abnormal scrap will be exactly same as the rate of normal scrap unless specifically given a different rate. So like I said, when a scrap dealer comes to you, he is not interested that this is what you should have produced and this is what you have actually produced. So it's abnormal and I'm not going to take this, or I'm going to take it at a lesser rate. He will keep the scrap is a scrap. So scrap, we don't say that the normal loss is scrap realizes 1 rupee. We are saying scrap realizes 1 rupee. It is only in the formula we are saying that total cost minus scrap value realized from sale of normal loss. So only the normal loss units which have been sold, whatever amount is recovered from that, that is subtracted from the total cost. So no matter whether you have a normal loss, abnormal gain, so far your question remains this much only. So this much information which is given in the question, I can paste it before even starting to do any calculation. 1,000 units, 5,000 rupees. Labor, 2,000 rupees. Overheads, 3,000 rupees. Normal loss, 5%. 1,000 into 5% is 50. Selling at 1 rupee per unit. That's it. I have just not done any question, any calculation. No difficulties posed so far. Yet, my almost everything is complete. Rest everything will follow itself. So you had 1,000 units. Out of that, there was a normal loss of 950. So 1,000 minus 950, you are expecting to have 950 units. This is your expected. You can calculate so far. So, but your 950 expected, however, the transferred is 968. So transferred 968. So you can put it here also by units transfer to next process. This information also you can put from the question itself, 968, and then just try to figure out the totals of the units. Is it totaling? Input is 1,000 units. Output is 50 plus 968. How much does it the output become? 1018. It does not match. Where side we have excess? Output is more, 1018. But this does not mean that 18 units have come up from somewhere. What it means is that the labor has done work effectively. And though we had expected them to lose 50 units, but they were careful. They dealt with the raw material in a proper manner. They did their production properly. So there is a abnormal effectiveness or abnormal gain. How much? 18 units are extra. So just don't take the total of the units, okay? And you will find out the balancing figure as either abnormal gain or abnormal loss. So if the input is more, output is less, then there is an abnormal loss. But if the output is more, 1018, and input is 1,000, there is an abnormal gain or abnormal effectiveness. But your formula remains same. Total cost minus scrap realized from normal loss, divide by total units minus normal loss units. So what do we have here? Total cost 10,000. Scrap realized from sale of normal loss 50. Total units 1,000. Normal loss units 50. So 9950 divided by 950. So you must appreciate this thing, and you must realize that whether there was no abnormal loss, whether there was no abnormal gain, or if even if there is abnormal loss or abnormal gain, your rate comes out to be 10.473. Now what you do is 10.473 is multiplied by 768 also, and 10.473 will be multiplied by 18 also. So when you multiply 9950 divide by 950. It's 10.4736 multiplied by 968. So in my calculator, I have taken till last decimals straight away. So this comes out to be 10,138.52. I will round it off to 139 and plus 50. So this becomes 10,189. Now, how much I should get extra? 189. You can multiply 18 by 10.473. It is 188.514. So this can also be rounded off to 188.89. 10,189. So don't use fill the totals here. Okay. Rest everything you can fill in the question, and this difference will automatically show you what the values are. Yeah, but to total it, you must fill completely round it off in such a way that your totals always tally. So 10,189, 10,189. Now, if you write here 10.473 and 1, it becomes 11. Here it is. Therefore, generally avoid the rate column unless specifically asked, and write the rates at the rate of here itself. Okay. The rate and rate columns do not tally. So these units and amount are the important columns which should tally. Right? So I hope this is clear so far. Now, very interesting thing will come here, and that is how much were the units sold as scrap? You had 1,000 units minus 968. So what could you sell as a scrap? 32 units. So what did you give to the scrap dealer? 32 units, who gave you 1 rupee per unit, and you got bank account debit 32. So this will change the normal loss account also, and abnormal effectiveness or abnormal gain account. First, let's look at the abnormal gain account. Here, this time we will have on the credit side by process 1. How many units? 18 units. What was the amount? 189. So what do we do to any abnormal gain or effectiveness? That will also move to the costing P&L account. But is this actually my gain? Once again, no. Why not? If I have not been able to produce this 18 units extra, which is worth 189 at the rate of 10.473, I would still had 18 units to sell as scrap at the rate of, otherwise would have sold as a scrap, right? So I would have still got 18 rupees, which I don't have now. So this is my loss. This is something, an opportunity cost, like even if I'm getting 189, 18 is something which otherwise also I would have received, which I'm not going to receive now. So this is my loss, and indirectly my true profit is only 189 minus 18. So 171 is my true profit. Okay. 18 is the loss, 189 minus 18. This will remain as it is, process 1, 50 units at the rate of 50. But bank will not be 50-50. It will be by bank. 32 units are only sold for 32 rupees. So how do I balance it? By costing P&L or by abnormal gain account. That 18 units I could not sell, which would have given me 18 rupees. So this is how I'm going to balance it through abnormal gain account. So if this entry is pasted here in the normal loss account, what will come in the abnormal gain account? To normal loss account. So this loss has reduced, this gain has reduced the units which I could have sold as scrap. Now look at it. Does the unit tallies with the unit? Yes. Does the amount tally with the amount? Yes. So normal loss account will remain same irrespective what is happening. However, if there is an abnormal gain, there will be a change in normal loss. Why? Because you had 50 units which you thought will give you 50 rupees, but the scrap dealer has only taken 32 units and has given you 32 rupees. So where has this loss of 18 to be recovered from? Abnormal gain. So by abnormal gain, 18 units at the rate of 18. And therefore, in the abnormal gain account, you will write to normal loss account, 18 units, rupees 18, and remaining goes to your costing P&L. So what we are trying to say here is, let us say good unit is costing me 10.47. So if I have 2 units extra, it is an abnormal gain. So my total profit becomes abnormally 10 into 10.47. However, I must not forget that if I did not have these 2 units extra, I would have had them as a scrap and they would have given me 2 into 1, 2 rupees otherwise also. So my true profit is not 2 into 10.47, which is 20.94, but it is minus 2. It's only 18.94. Similarly, if I say that I have 2 units less, so 10.47 into 2 is my loss, abnormal loss. However, because I did not have them as good units, I have them as a scrap. So at least I could recover 2 from there. So my true loss is not 10.47 into 2, but it is only 9.47 into 2. 1 rupee per unit I am getting from there. So 20.94 minus 2, it's only 18.9. Right? Is the concept clear thoroughly? We have to consider opportunity cost. Yes, opportunity cost in the sense that if there is abnormal gain, if it had not been there, you would have otherwise had the scrap units to sell. So you could have got 2 from there also, which you are not getting. Therefore, your true profit, extra profit is 171 or abnormal profit is 171 here. Right? All right. I tried to give you all the concepts. One more small thing. Let's do the process to account. So how do process to account begin? It will begin like this. To process 1, 968 units, 10139. So to process 1, 968 units will move from process 1 to process 2. Therefore, to process 1, 968 units and amount is 10139, which we had calculated for process 1. Here you will further apply material. So this material is not units, it's a subsequent or extra material, let's say 5,000. It can be, amount can be higher. It's not that when you apply material in process 2, it is nothing. The amount may be very significant. Even it could maybe more than even 10,139, but it will not entail any units. Units are the 968, which has come from process 1 on which you are going to work. So maybe you apply another material to this. Then wages in process 2, then overheads in process 2. So let's say this is given as 8,000. This is given as 6,000. So this is your total cost. Now what will further be given? Normal loss in process 2 is 10%. So if 968 units are introduced in the process and there is a 10% loss, so I assume 9.68 units to be lost. I can round it off till to 10 units. Generally, practically, you will see that, sorry, 96.8. Practically, you will see that units cannot be broken. So either a unit is lost or it is not lost, right? You cannot have 9.68 or 96.8 units as a scrap. So I'll round it off to 97 units for practical purposes. If you keep it at 96.8, you can give a mention in the assumption that for theoretical purposes, we have assumed that fractional units can also be a normal loss or abnormal loss. But here I have rounded off till 97. Whatever you do, please mention in the note that you have rounded off all units in whole number. So by I have normal loss, and it is said that the normal loss of process 2 sold at 5 rupees per unit. So units are 97 and amount will become 97 into 5, 485. So it's very easy, students. Till now, what you can do is whatever the information is given, you just have pasted all this. Your working will start after this. And the same formula is applicable in all situations. So that also makes things easy. Okay. So far I have done this. Now I will look at how many units are transferred to next process if there is one. So transfer to subsequent process, process 3, or maybe it is a two process step only. In that case, I'll say by transfer to finished goods account. So it could be process 3 or finished goods account. Now that number of units would be given to me. So for example, that is given as 900. So if it is 900, technically how much should be what is the input? 968. I have the detail of input. Now I'm going to get the details of output. So I have the details of output as normal loss units, 97, and transfer to next process or finished goods account, 900. The output total goes to 997 and the output is more than input, which means there is again a abnormal gain. The balancing figure of units. How much? 29 units are abnormal gain. So this will come on the debit side, 2 abnormal gain. So again, your normal loss account will have 97 units, 485 to process 2. So you can have a normal loss account of process 2 separate, or the one we had made earlier. In here only we can say to process 2, 97 units, 485. And then the total which moves to costing P&L in the abnormal loss and abnormal gain will be the total, one figure only, not different figures for different. In the internal column, you can bifurcate. Like if there is an abnormal gain from process 1 as well as process 2. So you can say to costing P&L, process 1, 171, process 2, Don't need to do it in bracket. Sorry, bracket is not needed. Process 2, whatever it comes out, and then combined figure will move to the costing P&L, not this 171. You can keep it separate also. So from process 1 to we should have 97 units as normal loss account, and amount should be 485. But again, we are not able to sell 97 units. So if out of 968, 900 units are moving to finished goods account, then scrap is only 68 units, not 97. So this 68 units into 5 will give you 340 rupees only, and balance has to be recovered from abnormal gain. 29 units into 5. 145 will be recovered from abnormal gain. Right? So we had abnormal gain of 29 units, but our fundamental remains same. Total cost before this was how much? 10139 plus 5,000 plus 8,000 and plus 6,000. Don't take the 29 as such, it is not even amount. I should not have written it. So you take the total of the amounts, which comes out to be 29,139. Total cost 29,139 minus scrap realized from sale of normal loss 485, divide by total units minus normal loss units. So this comes out to be 29,139 minus 485, which is 28,654, and divide by 968 minus 97. So we should have 871 units technically, but we have 900 units. So there is an abnormal gain of 29 units. 485 given, or you calculated? It is given. I said sold at 5 rupee per unit. Scrap gives 5 rupee per unit. This will be given in the question. So 97 into 5 is 485. 29,139 minus 485. Scrap realized from sale of normal loss units. So your total cost, which is to be borne by good units, is 28,654. And good units were supposed to be 871. So divide by 871. The rate is established at 32.8978. I'll multiply the 900 with all the rounded figures, and it comes out to be 29,608.03. So I'll keep it 608. And I'll keep it as approximate, rounding off to 32.90. Okay. So actually, if you multiply 900 by 32.90, it might come out to be a little more. In India, in currencies, don't take more than 2 decimals generally. Right? Now you can have the total of this side. I'll take a different color to do the total. So it is 29,608 plus 485, which is 30093. Now, one thing you will do is 32.90 multiplied by 29. It should be 954. And when you write this figure, your total should tally. So 10139 plus 5,000 plus 8,000 plus 6,000 plus 954. So the total comes out to be 30093. So this will verify your answer also if the total matches, or you can take it as balancing figure. I'm confused. How will normal loss account get tallied in case of abnormal gain account? Okay. So normal loss account says to process 97 units, which should have been sold for 485. This is the entry which I'll paste in the normal loss account, right? By normal loss account. So what is the general entry? Normal loss account debit 485 to process 2. So in the normal loss account, you will have to process 97 units, 485. How much out of 97 can be sold as scrap? As we don't have 97 units to be sold in the scrap, we only have 68 units. Why? Because 968 units were transferred from process 1, and out of 968, 900 units have moved to process 2. From process In process 2, 968 units came from process 1, and from process 2, 900 moved to finished goods. So how many units do we have as scrap? Only 68. These 68 units will sell at 5 rupee per unit. So the next entry will be buy bank 68 units for 340. So the normal loss account has not tallied here. There is a difference, right? Need a black sheet. I'm erasing some part here to create a abnormal loss account. And I'll create it in blue color ink so you can see. All right, from this question, let's prepare the abnormal gain account. Units, rupees, units, rupees, and particulars. So this is an entry here. How will it reflect in the abnormal gain account? By process 2. By process 2, we have a gain of 29 units. But 29 units, the cost per unit is 32.90. So 29 into 32, a total gain of 954 rupees. However, this abnormal gain should go to costing P&L account. But if I did not have the 29 units with me, I would have still sold them as a scrap at the rate of 5 rupee per unit. So this I will charge before taking to the costing P&L. I'll charge to the normal loss account. So 29 units I could not sell, which was to be sold at the rate of 5, 29 into 5, 145 rupees, which I would have got as a scrap, I did not get. This I will charge to the normal loss account. So in normal loss account, by of the 97 units, what happened? 68 were sold at the rate of 5 and 29 could not be sold at the rate of 5 because there was an abnormal gain. So abnormal gain account will bear this normal loss, and 2 remaining will go to costing P&L account. So out of 954, 145 would have otherwise also been received if we could have got it as scrap. So our true gain is only 809. Okay, is it clear now? So if we prepare a separate account for abnormal gain account process 2, then this is the step. Alternatively, we have seen that in the previous, we have already prepared abnormal gain. So I can write here 809 and the total can move to costing P&L account. 980. Okay. You prepare the separate accounts only. That will be easier for you. Got it? So crux is do not create the column for the rate unless it's specifically mentioned, and prepare separate normal loss account for different processes. So you might have to prepare more accounts, but it will be simplified for you. Normal loss account process 1, a separate account. Normal loss account process 2, normal loss account process 3. Similarly, abnormal loss account process 1, abnormal gain account process 2, abnormal gain account process 3, so on. But in the last process, it moves to finished stock account. Okay. Ensure your rounding off is done in such a manner that your amounts on the debits and credits sides should always tally. Yeah, rupees you will generally round to two figures in the for the rates, and for the amount you should round it off to the highest number, like whole number. Can we prepare abnormal gain and loss account in? Yeah, you can do it in consolidated manner. So I have prepared abnormal gain account in for the process 2, but I could have consolidated it in abnormal gain account only. So to normal loss account from process 1 separately, and by process 2, I would have written here 29 units and 145. Sorry, it was 900 something, no? 29 into 32, 954. To normal loss account 80, process 1, 1818. To normal loss account process 2, 29 units, 145, and to costing P&L, 980. But for your simplicity, I am suggesting that you keep the two accounts different because it doesn't make sense to add up the units, though you can do that. So here you have 954 plus 189, consolidated 1143. And on the debit side also 18 plus 980 plus 145. So if no calculation error, it is again 114. Then 29 and 18, 47 units, 47. So the whole thing is in this abnormal account, this 47 doesn't make any sense. 29, yeah, 29 into 5 is the amount which should have otherwise realized as a scrap if there was no abnormal gain. So you are thinking that you have made 29 units extra and the cost of one unit was 32. So you're thinking you have had a benefit of 954. But think about it, if these units were not there, they would have otherwise been in as the units in scrap. So they would have got us 145 there also. So truly speaking, your benefit is only 809, not the entire 954. Okay, so these were the fundamentals and basics of the process accounts. taken with small examples. Now let's take up a few questions also based on this. All right. A product passes through two processes. The output of process 1 becomes the input of process 2, and the output of process 2 is transferred to the warehouse. The quantity of raw material which is introduced in process 1 is 20,000 kgs at the rate of 10 rupee per kg. So it is specifically saying what was the input units, 20,000 kgs at the rate of 10 rupee per kg. So this becomes 20,000 into 10, 200,000 or 2 lakhs. So the direct material mentioned in process 1 is again a material 2, subsequent material or secondary material. Okay. Implied why? Because 20,000 at the rate of 10 is 2 lakh, it is not 60,000. Had this been 6,000 units at the rate of 10, then I would have may have assumed that this direct material is talking about this figure only. So if this had not been 20,000 into 10, it would have been, these figures been 6,000 into 10. So I might have assumed that direct material 60,000 is written here. This is the same thing. Okay, but now this is 2 lakhs and this is 60,000. So it implies that the process 1 also requires some secondary material as well. The cost and output data for the month under review are as follows. Material, labor, production overheads, 39,000, and there is a normal loss of 8% in process 1. Similarly, process 2, 40, 30, 40,250, and there is a loss of 5%. Company's policy is to fix the selling price of the end product in such a way so that you get a profit of 20% on sales. So once again, like we have talked earlier, 20% on sales. But we will be aware of the cost. As we are preparing the process account, we will know the cost. So 20% on sale is 1 by 5 on sale, which becomes 1 by 4 on cost. So the profits are 25% on cost. Prepare the process account and determine the selling price. So first let's prepare the process account. So I'll start with process account 1. Particulars, units, amount in rupees, particulars, units, and amount in rupees. Right. So to material, 1, which is 20,000 kgs at the rate of 10. So this is 200,000. Then you have subsequent material also, which is 60,000 to labor or wages, to overheads. By normal loss at the rate of 8%. So 8% of 20,000 would be 1,600 units kgs of raw material is lost. Is it clear? Process 1 has 20,000 kgs at the rate of 10, 2 lakhs. Direct material 60,000, labor 40,000, overheads 39,000, normal loss 8%. And companies, there is nothing mentioned about scrap realized or sold, right? And nothing mentioned about how many units have moved to the next process. So we assume that there is no abnormal loss or abnormal gain, only 8% normal loss, and whatever remains has moved to the next process. So 1600 units is the next normal loss. So by transfer to process 2, 18,400 kgs or units. Amount is nil here, so the entire amount will be charged to good units. 40,000 is the labor and 39,000 is the overheads. Once again, the total of the units tally because no abnormal loss, abnormal gain. And the total of amount will also tally. So it is 3,39,000. So by transfer to process to 18,400 units at 3,39,000. Divide and calculate the rate. 3,39,000 divide by 18,400. It's coming at the rate of 18.4239. So 424 I can take approximately. Similarly, you can prepare the process 2 account here only. Right. So in process 2, once again, you will have to process 1, 18,400 units at 3,39,000 rupees. And then in process 2, material labor overheads 40, 30 and 4250. 40,000, 30,000 and 40,250. So material, labor and production overheads. Material 1. Okay. Minu, I hope you've got it. Once again, process 2 also has some normal loss at the rate of 5%. So 5% of 18,400 will be 920 units. Nothing is mentioned about the realizable value. So nothing will be there in the amounts column. And whatever is there is transferred to warehouse. By transfer to warehouse, so 18,400 minus 920, 17,480 units are going to the warehouse. At what cost? This is the total cost. 3,39,000 was incurred in process 1. Then here again you have incurred 40 plus 30 plus 40, 1,10,250. So the total cost is 449,250 of the 17,480 units. So here we don't see any abnormal loss, abnormal gain or anything, not even the scrap from realizable value. Despite that, you will see that your formula, total cost minus scrap from normal loss, divide by total units minus normal loss units. Your formula will still hold true. 3,39,000 minus nothing from scrap, total units 20,000 minus normal loss units 8%, 1,600. Okay. So 3,39,000 divided by 18,400. The rate comes out to be 18.42. This will be your working note, which you will mention here. Similarly, in this way, 339 plus 40,000 plus 30,000 plus 40,250. So it becomes 4,49,250. Scrap realized from sale of normal loss 5%, 0. Total units 18,400 minus 5% normal loss, which is 920 units. So it comes out to be 449,250 divided by 18,400 minus 920. That is 17,480, which will move to the warehouse. Now, when you divide it, what is the rate that you get? 449,250 divided by 17,480. 4,49,250 divided by 17,480 units. So this is at the rate of 25.700, roughly. Okay. So we can keep it decimal still two places. Yeah, 25.70. And finally, it is asking one more question. Determine the selling price per unit of the end product. So because it has moved to the warehouse, we assume that this is the end product we are going to sell. And we have calculated this 1/4 on cost. So selling price should be equal to cost, which is equal to 25.70 plus 25% profit. So it is 6.425 approx. So the product should be sold at 32.125 rupee per unit. Here, because it is 0.125, you can keep the decimal till three places. Perfect. 6.425, not 64. Okay. Process 2 balancing figure will be moved to the warehouse. So by warehouse, 17,480 units at the rate of 25.70. Here, the amount will be written because of the constraint of space. I did not write, but same figure 449,250 will come, which will match the total. Okay. Normal loss account will not be prepared in this case. Why? Because no money measurement concept. Nothing has been sold. No accounting entry is possible. Okay. All right. So we can call it a day. Thank you all so much for listening patiently. If you have any doubts, you can ask. I'll take it up. Thank you. Any doubts or any questions? I'm sorry for having extended the session a little longer. Any doubts, any question? No? All right. So we'll continue from here. Thank you so much, all of you. So we can end the session. Thank you once again. Bye. Have a good day.